Moving on to the critical section of auditor's report, the section which talks about the responsibilities of auditor. This should come as a separate section with a title, Auditor's Responsibilities for Audit of Financial Statements. Let's see. In this section, auditors should state objectives of auditors. What is their objective? It is basically to get a reasonable assurance so that they can ensure the financial statement as a whole is free from material misstatement which can arise because of fraud and error. Okay, so what is their objective? It's to get a reasonable assurance, and with that reasonable assurance only they are going to come to a conclusion that financial statements are free from material misstatement. Not only that, okay, once they get that assurance, what is their final task? It is to issue an auditor's report. Of course, that would include audit opinion. Okay, so this should come under auditor's responsibility. But here, auditor should make it very clear that this reasonable assurance is a high level of assurance only, and it is not a guarantee. See, by using that reasonable assurance only, he is concluding that financial statements are free of material misstatement. But again, it is only a high level assurance, and it is not a guarantee that audit will detect material misstatements when it exists. Because it is possible that when it is done on account of fraud, which is methodically planned, it will become absolutely, some cases, impossible for an auditor to find out. Okay, that's why auditor should stress that this reasonable assurance is only a high level assurance and it is not a guarantee. Okay, then in this auditor's responsibility section, auditor should also state about misstatements. These misstatements can arise because of fraud and error. Okay, an auditor can describe them as material if those misstatements are expected to influence the economical decision of users, or he can even provide a definition, a description about the materiality by relating it with appropriate or say the applicable financial reporting framework. So here, when auditor talks about misstatements, saying that it can arise on account of fraud or error or fraud and error, he can describe them as material. He can describe them as material when it is going to have influence on the economic decision of users, or he can instead provide a definition and description of the materiality as per applicable framework. Okay, then auditor should also state that he is exercising professional judgment and he maintains professional skepticism throughout the audit. Then he should also describe what is audit. He need not give the definition, but he can describe the audit by listing out his responsibilities. Let's see one by one. So he should say that it is the responsibility of the auditor to identify and assess the risk of material misstatement in financial statements. Okay, so by studying the internal control system, by studying the accounting system of an entity, auditor will be able to identify what is the risk, okay, the kind of impact it can have on the financial statements, the misstatements that can arise because of fraud and error. So it is the responsibility of the auditor to identify the risk inherent which can have or which can result in misstatements in financial statements. So having identified and assessed the risk, it is now the duty of the auditor to design and perform audit procedures in response to risk, and this he should bring out in auditor responsibility section. Then auditor should obtain sufficient and appropriate audit evidence. Only then he'll be able to come to a reasonable conclusion. Okay, and the risk of not detecting the error will be lesser, but the risk of not detecting the fraud will be very high, because fraud will be generally involving collusion or forgery or intentional omission or misrepresentation or even override of internal control. So they are methodically planned, so it becomes difficult to detect the fraud. That's why it is mentioned the risk of not detecting the fraud will be higher. Okay, and in auditor's responsibility section, auditor should also state that auditors have understood their internal control system and have designed audit procedures which are appropriate for the circumstances of that business entity, and they evaluate. Okay, I mean, in that responsibility section they should also mention this: they evaluate whether the accounting policies adopted by the entity are appropriate. Okay, they also look at the reasonableness of accounting estimates made by the entity, and they also look at the related disclosures that are made by the management. Okay, so auditors are going to do this as well, and auditors will also look at the conclusions. Say the management is saying that this entity is capable of being as going concern, whether that conclusion of management, whether it is appropriate even now. Okay, let's say this entity says that yes, it is capable of continuing as a going concern, but there is no revenue visibility, there is no possibility of doing business, let's say for next 2 to 3 years, and if this business is not having supporting resources, then auditor will evaluate the appropriateness, okay, of management's use of going concern. Okay, so if there is material uncertainty existing in continuing as a going concern, then auditors will come out with their conclusion in audit report. Okay, then auditors should also state that they have discussed with those who are charged with governance. That's what mentioned as TWCWG, those who are charged with governance. That is, auditors should state that they have discussed with people who are charged with governance about their planned scope of audit, timing of audit, and whenever they come across a significant findings, even that has been discussed, and whenever they come across a deficiencies internal control system, even that has been discussed. Okay, so whatever they've discussed, that need not be brought out, but the auditor should make a mention that they have discussed about the planned scope of audit, timing of audit, significant audit findings, significant deficiencies to people who are charged with governance. And auditor should also state, especially in case of a listed entities, that auditor has provided statement. He has provided a statement to those who are charged with governance that auditor has complied with the ethical requirements regarding compliance. Because when it comes to appointment of auditor for listed companies, the requirements are even more stringent. So auditor should give a statement that he has complied with ethical requirements about independence, and he should also give a statement that he communicated all relationship. Okay, I mean, he should have given the statement to those who are charged with governance, but that should come out in this auditor responsibility section. That is, he has communicated all the relationship and other matters which are going to have or have bearing on auditor's independence. Okay, all this should come by way of a statement by auditor to those who are charged with governance. And in case of listed entities and even other entities where key audit matters are applicable, auditor should bring out in his auditor responsibility section that important matters which were found during the course of audit were communicated to those who are charged with governance, and of those matters, some matters which are considered as more significant were brought out in the audit report. Okay, those matters which were considered as more significant while auditing the financial statements of current period were brought out in the audit report as key audit matters. Okay, so it means there is a cross reference to key audit matters under responsibilities, auditors responsibilities section once again. Okay.